This is a Stock Trading Reality Podcast, episode 200. Woohoo!
My biggest mistake that I like to point out is having the false mentality of thinking it can never get worse.
This is the Stock Trading Reality Podcast, where you get to see the realistic side of a trader's journey. Get inspired and stay motivated by everyday normal people who are currently on their journey to trading success. And this is your host, 200 episodes in a row, uninterrupted. He is shocked. Play Trader.
Now, we do talk about this a little bit at the beginning of our episode here when we bring on our guest. I'm not going to tell you how they answered, but me personally, I am shocked that we actually got to 200, and maybe not exactly well thought out here, but Ches also gave some thoughts on 200, and I guess we just won't offer up any spoilers to the interview. But yeah, I am shocked, and you'll get Ches's thoughts, and you'll get our guest's thoughts too on this whole 200 episode thing. But yeah, 200 episodes in a row uninterrupted. I am quite a bit shocked by that, but it's been a long ride. It's been not long in a bad sense, 200 Mondays in a row. That's we're talking multiple years here, but it's worked. It's gone well. We've had all sorts of good guests, and on that note, we have a couple of great guests back. And Ches, I guess, what did you? Because we have to keep up the tradition. I need to at least bring you in here somewhat. But were you okay with the choice of guests that I had come back?
Oh yeah, absolutely. But considering how many years it's been that we still have staple community members that were, some of the first 10 episodes that we ever did, and we're able to get them back on episode 200. Yeah, I would say that it's a pretty amazing feat for sure. That's true.
And in all actuality, I could think of several others that we could have from those first 10. Not all of them. Some of them I don't know what happened, but there's a few others. Definitely, if you go to the first 20, there are several more that we could have had back.
Definitely,
but that's a good point. Anyways, we are bringing back our Canadian friend Hooch. He was on episode number 2, and then several other ones, and then also Nate Wilson. He actually was just on several weeks ago as a welcome back episode, but he was willing to come back here and help us out with episode 200. So it's a 4-person discussion, and really, I had a general premise. The premise being, we're all going to talk our mistakes, how to avoid them, how to potentially fix them. And, as always, when you have an open discussion, it kind of can spur off into other areas and other rabbit holes, which I think brought about some very valid talking points. One warning, though, we have kind of a false end where we're starting to wrap things up. And then Hooch says, hey, I have one more thing that I just thought of. And then we go for like another 10 minutes more. But that 10 minutes is very valuable. What Hooch brings about is a 110% valid point and a very important point, which, Ches comes in and provides some cover fire by telling a story that really illustrates the whole idea that, we talk about at the end. So don't turn it off early, because it sounds like we're starting to wrap things up. I promise it actually goes a little bit while longer, and there's a whole lot of things that are discussed. But at the core, let's talk mistakes. Let's talk kind of regrets. Let's talk some things that we've learned and how to avoid those mistakes, and, how to improve, and for you, especially if you're newer, just how to either fix it or just totally sidestep them in the first place. So let's get to our discussion with Hooch and Nate Wilson. Hooch, Nate Wilson, welcome back to the show.
Thank you.
Thanks for having us.
Now I need an honest answer here, to which I know both of you will be honest because you've been around so long. Little context. Hooch, you were on episode number 2, and then several since then. Nate Wilson was on episode, I think, 7. So you guys have been around a long time. And I bring that up because, honestly, did you ever think that this thing would get to 200 episodes?
No,
not the podcast. No.
All right. Well, isn't that where you say jinx or whatever? That was the game I played as a kid. But you guys both said no, though, right? At like the exact same time?
Yeah. We both were you didn't have very much confidence in you.
Well, that was like perfect unison. That was almost sounded like it was pre-planned. But Ches, what did you think? Do you think we were ever going to make 200?
I'm not sure that I thought we would make it to 200, but I'm more, amazed that we've had episodes every single week since we've started. We've never actually missed a week, and I find that more amazing than anything.
That's true. I guess now that you bring that up, that is a pretty something that I probably would have thought. I mean, you got to have confidence, right, to start something. But if someone had said, "Yeah, you're going to have it for 200 Mondays in a row," I don't know if I would have quite bought that. But
that is true.
Here
That's
we
impressive. You didn't even miss a Monday. I mean, I never would have guessed that. I didn't think you make.
We got close a couple times, but we still pulled it off.
Yeah,
you started walking around on the street, just offering to pay people to come on.
Yeah, no, absolutely. I just went down to the bridges and stuff like that, and said, "Hey, I'll buy you whatever you want," and they were like, "Okay." So that's how we met Hooch. People think that Hooch actually is some trader. He's actually just some guy that lives under a bridge in Canada, and he just bails us out whenever.
I was a trader. I lost everything on penny stocks. So yeah,
that's right. Which put him under the bridge. Perfect. Well, I'm assuming you as a listener saw from the title. We're all going to talk about 3 of our biggest mistakes, and how we can fix them or avoid them. And Nate Wilson may have to just bail. Hopefully we'll have him for a little while, but he's taking some time out of work. But the schedule, you never know.
In the middle of a work day, like dead smack
middle of
a
work day as we do this, which just really goes to show on Wednesday, which goes to show just the quality of people we have around here in terms of willingness to help. So I guess I'll start things off. And for full disclosure's sake, there's going to be a lot of people thinking on their toes. I came prepared, but I don't know. I may have failed to communicate what the topic was, but I think we'll be able to manage it through. So my first, and probably, I don't know if it was my biggest mistake, but one of my biggest mistakes was not understanding commissions and how much commissions can actually screw up a trade plan. And this always goes back to, if you're a longtime listener, you've heard this, but my first trade ever, I signed up through my bank, like Fifth Third Bank, which is a regional bank here in the Midwest. And the thing is, regional banks are not online discount brokers, but I didn't know that. So I was just like, well, I'm buying some shares, and I bought LVLT, and I remember it went up in my favor. And then when I went to sell, I'm like, man, I just made some money. And then all of a sudden, looking at the state, just trying to look at the numbers, like, why is that? I mean, I think I know how to do math, basic math. Why is that number so much lower than what it actually is? And I don't remember exactly what it was, but I'm pretty sure I paid $30 to buy and then $30 to sell, which left me with $60 in the hole to come out of. So I don't remember exactly what I made on the trade, but it was not nearly as much as I thought it would be. So that was one of my not necessarily biggest in terms of, I mean, it didn't cost me anything, but one of those things where, if you are new as a listener, or maybe you're struggling with your strategy, maybe something has to do with the commissions. I mean, if something's not quite right, you very well could be paying, you may be paying too much. And obviously I think that the how to avoid this is pretty self-explanatory. You want to make sure that you do your research and figure out your strategy. So, I mean, did any of you guys have a commission issue at any time during your journey, or am I the only moron here in that regard?
Yeah, I never had that. I mean, I think my first account and the original account, I mean, I'm not saying I paid, the same low commissions I paid now, but my original account started with TD Ameritrade. So they were always like an online broker one, but I think at the time it was like maybe $15 to get in and out of stuff, but I think I knew that from the beginning. And I think if I called, then it was like, maybe it was like $60 or something like that. So I don't think I ever had that issue with commissions, but I do remember when I first started, commissions definitely were a lot more than they are now. Cause TD Ameritrade now, it's like $4.99 or something for a trade or something like that.
Yeah, they've definitely come down. And Wilson, you never traded penny stocks, right? You always avoided them?
No, I traded those on TD Ameritrade.
Gotcha. Yeah, I don't know. I don't know if anybody ever used E-Trade because they thought that was the great broker for penny stocks. But yeah, once you went over a certain amount of shares, it was just an absolutely insane commission. So yeah, I definitely got smoked on commissions when I started, and I was like, yeah, I made a couple bucks. Oh, just kidding. I just spent like $45 on commissions because I bought 10 million shares of some garbage stock.
Yeah.
Hooch, did you ever have any issues with the commissions? Hooch, your mic is still muted. If you're
You forgot about the lovely mute button.
Sorry.
There it is.
Yeah, when I first
Typical Canadian.
Yeah,
when I
freaking
first
Canadians.
started trading and like for like, I don't know, 10 years, something like that, maybe even longer. I was on my old brokerage at the bank, and I just signed up there because that's where I worked, and didn't really put much thought into commissions. And then when I started trading options, it was like, I think $6.95 base and then $1.25 per contract or something ridiculous like that. So I thought the only way to make money was to, buy like 100 contracts at a time just to, make up for the commission I was paying. So yeah, that was kind of ridiculous when I first started trading options. So
yeah. And what kind of just dawned on me is, I think a lot of times people are in the mindset of commissions are bad, therefore commissions should be avoided at all times. So they automatically think that a no commission broker would be the smart way to go. Now that I think about it, that can be very deceiving because it depends on your strategy. So along the lines of how to avoid this mistake that sounds like a lot of us have experience with, is just also understand that if you're not paying anything for fees, you could be paying a lot more in the sense of the broker is not going to help you with your strategy. And if your broker is not actually built for the strategy that you want to do, then it's going to cost you a lot more than what the fees would have been. A quick example of that is myself and Nate and, even Hooch. And I don't know, and correct me if I'm wrong, Hooch, but you do not do your scalping. You do not do your intraday day trading from your phone or anything, do you?
No.
Okay. So for the three of us, and I would assume Ches is in the same boat. Yeah, there's this thing called Robinhood. Yeah, there's M1 Finance. Yeah, there's insert blank of zero commission, zero fee broker out there that has like a phone app or something like that. And don't get me wrong, that's great if you're investing. That's great if you're not trying to do anything that requires, I want to sell within the next 5 minutes. But for us, we are looking to sell, to scalp, to day trade in very short amounts of time. So for that, it's definitely worth paying something because it's going to allow us to execute our strategy much more efficiently. Where if we're trying to do all this from our phone for the sake of saving, a little bit of money because, we want the zero fees, that could be an absolute disaster. So remember, though, the whole fee commission thing cuts both ways. It's not necessarily a matter of, I don't want to pay any fees at all, and therefore that's what makes it a good broker. No, what makes it a good broker is, does it fit in with your strategy? And you're saying, I'm brand new. I don't have a strategy. Exactly. That's why one of the broker selection is one of the last things you should be focused on, because you first have to establish what your strategy is, what your goals are, and then that'll point you to what sort of broker you want. So anybody have any more thoughts or want to call me out on anything I said? Any flaws in logic there?
No. I mean, the only thing I'll add is that, and it came up with us just the other day with the borrow fees. I mean, it's a little bit different, but I think similar in the sense of like, people were discussing borrow fees, and I was like, yeah, I don't go request any shares and add a bunch of extra borrow fees. That just doesn't fit my strategy, because like in that sense, I just can't get behind paying some fee to find them, and then I may or may not use them. You know what I mean? So it's like I'm already setting myself up in a hole. Like before I've even gotten in the trade, I'm already down whatever. What I think yesterday it was like we were talking about $25. Now, if you're going to make a bunch, but what if I don't use them? Then I'm down $25 on the day. I haven't even made a trade yet. That doesn't. So I would say for my strategy, it's also ignoring those stocks that have extra borrow fees.
No, that's a good point, because that's something else that can really get you. And I mean, I've never. I shouldn't say never. Maybe I did it. I can't remember the last time that I actually paid to borrow any shares, because I'm not going for some sort of grand slam trade, which I get a lot of these people out there promote. Well, it's worth paying because we're going for a huge trade here. Well, it's like, okay, in that situation, fine, but that's just not my personal strategy. And it's just that's a good point, Mr. Wilson. I'm glad you're here. So thanks for being here. That was something that makes a big difference, or can really kind of sneak up and bite you.
Yeah, I mean, because you're exactly right. I mean, if you're, I can remember them, like how ridiculous they were for those the actually legitimate pot stocks that were running, at the end of last or whatever, like CGC and TLRY or whatever. But you could request to borrow those, and they had huge borrow fees. And like for me, if it's you're trying to scalp them and make whatever $50 or $75 in a trade where you're in and out in a couple seconds, like, and you're paying $25, like you're immediately like best case scenario, and then now it's $25 or $50. Whereas I guess if people were like, okay, I'm gonna hold it for a couple months, let this go back to zero, then fine. But otherwise, it's like it definitely made it so I wasn't trading those at that time.
No, since you're on a roll. Yeah, no, that's a great point. And quickly for listeners, what is a borrow fee? When you short, meaning you want to make money from prices going down, you have to borrow shares. And in some situations, there's plenty of shares out there where the broker doesn't deem it too risky or crazy or anything. So you just get them. But in other situations, we're like, no, we'll give them to you, but there's more costs associated with it. So that's what he means by borrow fees. But yeah, good discussion there on fees. So yeah, as somebody that's new, or maybe if you're struggling in your strategy, maybe fees, maybe commissions, maybe the broker actually isn't the right broker for you. But Nate, since you're kind of on a roll here, what is one of your biggest mistakes?
I think my biggest mistake that I like to point out is having the false mentality of thinking it can never get worse. I can remember, I think my biggest trading mistake since day trading was definitely surrounding that mentality. Was on that particular day, the stock that got the better of me, it had gapped up, so the price was opening a lot higher than it had closed the day before, and then as the market opened, it had started to pull back, and so kind of had this mentality of going long and buying the pullback, going with the trend, and I think at some point the trend changed and was no longer a bull trend, and it was collapsing. And I think I very, very clearly remember a point in time when I was like, well, it definitely can't get any worse than it is right now. It's definitely going to bounce, and I remember it melting on me, a lot more, turning that loss into, I think, the biggest loss I've ever had in trading. And so I remember that day, like after, or that night, or, trying to review what I had done wrong. And I was like, I definitely was having the mentality of, just hold this. It definitely can't get worse, because I started ignoring the chart and the price action and not looking at what was actually going on, in anything. I just like, well, there's no way. It's, it gapped way up and now it's lower than it was the day before. It's not going to keep going down. But so I think fixing that mentality, because the answer is it can always get worse.
Anybody else seen that or had that before?
Mine is actually, I have an interesting twist on it. I guess I've usually, by the point where I'm like, oh, it can't get any worse, is the time it kind of turns around. But it's usually pretty rare that I let it get that bad. But yeah, it's I can definitely see that happening, and definitely something you need to be wary of for sure.
Hooch, did you ever have any trades or whatever where you defaulted to the, it'll come back up. It can't get any worse than this. It'll at least go a little bit in my favor.
Yeah, not so much lately, but yeah, definitely you've had that hope trade where you start averaging down, and you're like, well, this is it. It's either I pray and hope something happens, or I'm having a bad day. So
yeah,
that's
go ahead.
That's also one of the reasons why I've over the past year or so lowered the size of my options trading, because especially once you get closer to expiry day, your options can, your contracts can easily get to zero or close to zero. And then even if the move does go back in your favor and, you're break even on the underlying, you could still be, 80% down on your option trade. So you really gotta, especially with options, that's really something that you have to avoid doing. Like even if you're averaging down and you've got a huge account, I mean, you could average down until you're blue in the face. If it's not going to go back to, in the money or whatever, then you could just lose everything.
So you have kind of dealt with, and you've learned to deal with the hope trading, or whatever you necessarily want to call it, that it can't get any worse type mentality. It sounds like you've just modified your position size in order to help kind of just deal with that. Am I understanding that correctly? Is that a way that a listener could potentially avoid or fix the problem that somebody might have if they're suffering from, I would say, a pretty common error that exists out there?
Yeah, because I don't always use stops when I'm trading, especially if I'm scalping or whatever. But with the lower size and the smaller, the lower priced contracts, I mean, even if you let it go to zero, then you could get away with losing $50 or $100 or whatever, which I mean is never good, but at least that way you're limiting yourself up front by
kind of
how much you're putting into it.
Yeah, you've capped the risk.
Yeah.
I was going to say that is definitely a nice thing about options is now Hooch is not he is not sitting here proclaiming that all you do is you load up on cheap options contracts and then don't use a stop loss. That's not, he's just saying that by using smaller share size in an absolute worst case scenario, it's still a $50 loss. So that gives him a lot more leeway. And it's not like he's going to burden himself with any sort of other potential temptations or voices that might show up had he had a lot bigger share size. So, or in this case, contract size with the options. So yeah, no, that is true. Cause I know I've been there before and it's amazing. It's just like, all right, this thing is so beat up, or this, insert blank situation is so bad, it can't get any worse. Oh, it can always get worse. And so that's and I see it all the time too, and especially because for listeners' context on the YouTube channel, there's lots of 101 videos, and it's people leave comments. So why don't you just sit there and wait until it comes back up? And okay, you have to realize though that there's no guarantee that anything is ever going to go back up. So to kind of circle back to Nate's point, it can always get worse. Or maybe if it doesn't get worse, maybe it necessarily never gets better and you just sit there and then you have the opportunity cost factor in and now you're losing out on potential gains because your money's just sitting there while you're waiting for something to happen that may never happen at all. So, I mean, there's at the moral of the story, you got to keep your risk under control and just realize that it can certainly always get worse. Ches,
but I would also add too that not only that, but it's also a mental game. How much of it is a mental game? So like making sure you have the right mentality was kind of like a big wake up call, you know what I mean? Where at that point in time, I wasn't paying attention to any other, cues that might have, helped me, manage the trade better because I had this wrong mentality that was kind of clouding my judgment. So keeping a clear mind is just as important as remembering that and that kind of stuff. Remembering that it can get worse, but keep a clear mind. Trade what you see, not what you feel.
Is that one of your other things? Is not having a clear mind? I mean, how do you keep a clear mind?
Oh, I don't know. What do you mean?
I don't know. You say you have to have a clear mind to follow your rules. And I mean, I would answer that question. I try to keep my mind as clear as possible because I'm looking at a chart and the chart is giving me data. And if I just stay as focused on that data as possible, that can help keep my mind clear.
Yeah, that's essentially what I'm saying.
I'm not saying that's, yeah. I'm just, but it's a good soundbite. You have to have a clear mind. But could you define how you would actually have a clear mind?
No, that's what you were saying is exactly what I was trying to portray, which was that having keeping your focus on, like, for instance, we use technical analysis and the price action on the level 2s, and so that keeping your mind clear to trading what you see rather than this false mentality of in this case, I was saying, oh, I don't think can't get any worse here. It definitely can't get any worse. And I wasn't paying attention to, those other things which are, the quote unquote clear mind way of trading for me.
No, that makes sense. That was a much better explanation than what I just gave. Hooch, now I'm kind of on the edge of my seat, unless you were just trolling. I don't know. But a couple days ago, you said you had your 3 and that 2 of them might surprise. So, Hooch, what are one of your mistakes that you've made? And I guess I'll leave it up to you if you want to give us one of the surprise ones or not. But the ball's in your court.
Oh, give us a surprise. Give us a little tickle, Hooch.
Well, there's the obvious one of not getting educated first, but I mean, that's been talked about before. And one of the other ones I've recently sort of acknowledged, I guess, or maybe just realized is not having a second source of income or any other source of income, whether it's a second or a third or fourth or whatever. Even if it's like a small amount, I mean, you don't have to, go into something like real estate investing or starting up like a second business,
investment banking.
You don't have to try and start up a new Amazon or something like that. I mean, I just started doing Uber Eats a few months ago, and even if I make like $40 or $50 in a couple hours in the afternoon, I find that really helps me mentally, knowing that I do have at least a little bit of extra income coming in, and also as a side effect that it can take me away from the computer and the market during the slow times around lunchtime and early afternoon. So it had been suggested to me before, I know, by you, Clay, and even Ches and some others in the chat room, and I'm like, nah, I'm okay. I can deal with it. But then once I actually started doing it and realizing how helpful it was another game changer for me, really.
Nice. I have a question. So you do Uber Eats, which is just you drive around. Is that inaccurate of how it works?
Yeah, you have the app on your phone, and once you go online, you'll get a contact from a restaurant to go pick up some food, and then you just deliver it to the customer.
Okay, so I mean, my question would be, what are you doing while you're driving around? Do you listen to audiobooks? Or you listen to podcasts? I guess because in my mind, I see this as a great opportunity to get paid to either learn more or to get motivated or to but I don't know. Maybe you just sit there in pure silence. But what are you actually? Do you listen to anything while you're doing your deliveries, or
while I'm actually driving around, like on a delivery, then I'll just usually be listening to music. But there is some downtime, like anywhere from maybe just a couple of minutes to up to 20 or 30 minutes if it's a slow day. And during that time, I'll usually either be reading my Trading in the Zone ebook or listening to podcasts. I am kind of behind on podcasts. I think I'm only up to about 100 and something right now. So 100, like low hundreds. So I've got some podcast catching up to do, but
yeah, you're way behind.
Listen to that junk.
Only yours.
Yeah, there we go. I would say that I get it. It's great to say, yes, I'm a full-time trader in the sense of, let me put it this way. If you are a full-time trader, then you are failing in many other areas of building wealth and money management. Nobody should say, yep, my only source of income is from trading. I get it. That's like cool to say, but no, this is building wealth. Having control of your finances is about getting as many financial income streams as possible. And to Hooch's point, there's just something about it that when you know that there's money coming in, then there's no pressure to actually generate, money from your actual trading. So while it's great, I want to be a full-time trader and that's all I want to do. Well, no, you should say I want trading to create an income stream for me, but how else can I create income streams? And for a lot of people, that's, by having some sort of job or a side job or, a part-time job. And I mean, and all of us here, we have some sort of side hustle, side jobs that we work in. I don't want to speak for everybody, but I think we would all agree that having that extra form of income come in is a pretty good, it keeps the voices at bay. I mean, would you agree with that, Ches and Nate?
Yeah, no, totally. 100%.
Oh, I mean, I learned that, firsthand experience, right? When I decided to leave the stable 9-to-5 job, and I was like, oh goodness, like my mentality is just going down the crapper right now. And then I just started driving for Lyft and Uber, and I was like, wow, it just put my mind at rest. I could show up to the desk every day knowing that, if I don't make any money today trading, don't worry, I still have this side thing. It just relieves you. And I'm telling you, when you're new to trading, you kind of need all the mental things you can in your favor. Otherwise, you're gonna have a real struggle trading.
Yeah, I like how that you need to like build an uptrend in your mind. Get all the mental things in your favor that you can. Like Ches said, like build that uptrend because it does make a huge difference. And I guess Hooch, what kind of pushed you over the edge? Because like you said, people have told you, had suggested it. Did you just decide to do it because you know what, I want to, let's just give it a try? I mean, is that kind of what you ultimately decided was let's just see what happens?
Well, I had some financial stuff come up last spring, and I had to take some money out of my trading account. So I was at that point where, I'm still drawing money out of my trading account to, pay the bills and all that fun stuff. And at the same time, I now had to try and rebuild the account back up. So I had that extra pressure now of, basically needing to make more to build the account up. So that was when I started looking more seriously at some kind of a part-time job. And I was looking at, just doing evening jobs or weekend jobs or like even like afternoon shift jobs and stuff like that. And then I started looking more into Uber Eats and you can't beat the flexibility of it. You can literally work whenever you want to. I mean, you could go out and work from midnight until 4 a.m. if you really wanted to, kind of thing. So, and the pay, you're not going to get rich doing it, but I get paid, minimum wage here in Canada is $15 an hour. And I on average make about 20 or so. And it's, it's pretty mindless work. So it's pretty good pay considering the skill level involved in the flexibility of it.
So here's a quiz for you as listeners, because Hooch just displayed what a mature trader looks like in the sense of understanding just the overall picture of trading. If you're sitting there as a listener thinking, okay, he needed to rebuild his account, so why didn't he just up his game trading? Why didn't he just, put a little bit more in a trade so that he could make his wins bigger and that, and therefore build up his account back to where it was quicker? And I get it mathematically, spreadsheet wise. Yeah, that does make sense. That's what Hooch, you could have looked at things and said, okay, I need to build back up my account. It's time to put a little bit more position size. It's time to maybe put on more trades. It's time to do more. As traders, that is the worst thing you can do, is do more. If more is outside of your personal risk tolerance and outside of your strategy, that that's going to lead to bad things. So I really admire you, Hooch. That's great that you recognize the solution here to build back up the account, because sure, life happens. I mean, welcome to this thing we call life. I'm glad that you didn't default to the spreadsheet math of, well, if I just do more, I can build it up that much quicker. Whereas you decided, no, I need to keep my strategy the exact same, but to build it back up, I'll get some external trades out there, trades known as the guaranteed profits of JOB. So, yeah, that's good stuff. And that's a very valuable learning lesson for you as listeners out there is, as traders, the answer isn't as easy as what a spreadsheet may be telling you in terms of, well, if I just up my position size, I'm good to go. Yeah, it's easy to put in, the equal sign in the spreadsheet and then click on some different cells, and those numbers will show you that's the way to go. But there's this practical side of trading too, where risk tolerance and then your strategy infrastructure plays a large role in that. So yeah, thank you for sharing that, Hooch. That was very good. But our esteemed co-host Ches is kind of hiding in the corner. Maybe he thought that we forgot about him, but we got to hear something What is one of your mistakes that you've made, Ches?
I think it would just be overconfidence or thinking that you could put a set time frame or time parameter on when you're going to be good at trading. I kind of came into this with, okay, I have 6 months to really, get this down packed. And, if it takes 8 months, 9 months, it is what it is. And then in reality, it took me like probably over a year and a half before I actually got to the point where I was consistent enough to be like, wow, okay. Like that kind of overconfidence and, thinking that it's like school. Oh yeah, you go to class and then guess what? I practice a little bit and then you put it into action. It's sort of like that, but I assure you there's a lot more kind of curveballs that the market is going to throw you and a lot more uncertainty that you have to be willing to deal with every day. So for me, that was kind of one where I was trying to force my will upon my trading. Like, oh, you need to be good now. Like it's been 8 months, it's been 9 months, it's been 12 months. You need to be good now. Like you should be self-sufficient at doing this. And in reality, it takes everybody a different amount of time. And, similar to how you can't force strategies on people, you can't tell somebody that this will only take you 3 months. Everybody who's taking this program, it only takes 3 months. Everyone's going to be different in that regard. So that's definitely the one for me that I think still stands out the most.
Wilson, do you have to leave?
Well, I will at some point. I don't know. It will probably be shortly. So
okay. Well, just do you have any thoughts on Chez's kind of error that he made? One of his mistakes.
Yeah. No, I agree with him in that sense. I would totally agree that it took a lot longer than I ever thought. I would say one of the kind of adding Hooch's comment and Chez's both together is one of my lucky benefits was I have a full-time job. So it was always kind of, the trading was always kind of my other income stream or my, part-time, job. So I always viewed it as any extra money was better than no money at all. So I always had the added benefit of taking my time and not rushing anything. But I agree with Ches that like when I first, started, at least even getting educated, I started taking the classes and was like thinking, okay, I'll finish this course and then I'll know, like, there's a course on shorting. Okay, well, once I take the course, I'll know what to do. And yeah, it was a lot, it was a lot different than that. It ended up being two years or something before I would say I knew what I was doing. Yeah, so I would just say that it definitely is the long journey. It's not a get rich quick kind of scheme, even if you may get lucky and get along the way.
Yeah, and I mean, I personally don't think anybody's stupid for thinking that there's some sort of time frame, especially when you see a lot of stuff out there where, I'm not going to bring up any specific names, but buy our program and then you lose access to it after whatever it is. I don't know. Let's just say 3 months or whatever. So what does that imply? Well, that implies that, hey, listen, you're going to have all this figured out in 3 months because that's why it expires. Because if you take my program, you're going to have this figured out in X amount of time, whatever that is. And then you lose access to everything and everything's fine. And, it'll all work out. I mean, that's just some of the scumbag mentality and scumbag marketing that some people are using is because, or is that just me? Or would you agree that implies that?
Yeah. It implies you're going to learn everything and know everything you need to know in 3 months. And as long as you don't waste your time in that 3 months, you should be good, is what that's telling. I mean, would tell me as a buyer of that.
Right. And so to by no means would I say Ches was stupid or, anybody that shows into this thinking, okay, how long is this going to take me to, in fact, that's one of the probably more common questions I get is how long will it take me to leave? And I was like, well, I don't know. Are you a single mom with 8 kids or are you a bachelor at home who's super smart and can just absorb knowledge really quickly and you're like a Jedi master of your emotions?
Well, now you're stereotyping. What if the stay-at-home mom was a Jedi master of her emotions and a savant?
Well, she's still got to deal with 8 kids.
Children that made her that way for sure.
Yeah, she's still got to deal with her kids.
Yeah, you're right.
Yeah, I know I'm right. Don't even try this, Wilson. I brought my A game today. I got to be careful though, because the Hooch is here. Hooch knows how to troll, so I got to be very wise with my words.
I was just saying that you referenced the person as a bachelor at home, or why couldn't it be a bachelorette?
It could be.
Yeah.
I mean,
so
it
a
could be the single
person,
dad
so-
with 18 kids.
Well, you should. Well, now we've got kids, so now we know they're busy.
Who invited you here in the first place, Wilson?
Well, I was getting ready to leave, so
I was going to say, do you have to go yet? Or
the clock's definitely ticking.
I do have a question for Ches, though. I mean, was there ever a light bulb moment where you just realized, this whole time factor thing is just not going to work out? Or are you just kind of talking all in hindsight here? Or did you have some specific moment where you just kind of had to look in the mirror and say, you know what, chill out. It's okay if it doesn't happen in, X amount of time, whatever that was.
Yeah, I think I wouldn't say it was a light bulb moment. It definitely was kind of more of a gradual gradient to get to that point. But the whole thing that turned my trading around personally was stop putting pressure on myself. There's no reason why I need to have this idea going into trading that I need a 100% win rate. It's just pretty much trading is trading, and it's just as simple as setting your odds and spotting opportunity. But to me, I needed to be like the best home run batter in trading ever. And that kind of pressure was just completely unreasonable and unnecessary. And not to mention completely unrealistic. So once I kind of realized, I'm like, hey, guess what? I can literally win 30 to 40% of my trades and still make money, assuming you structure the trade correctly. And in fact, some of the biggest traders in the world have well under a 50% kind of win average. And don't get me wrong, I know when you guys are scalping, your hit rate is drastically higher. But yeah, once I kind of removed that pressure, once I realized that pressure was totally unnecessary and just in my own head, there's nobody sitting at my front door and, staring in my office window saying, oh, you need to do better. You need to do better than that. And it's just, it was all kind of mentally made up in my own mind. But no, once I kind of realized that, that was silly, that's when I started to relax more. And when I'm relaxed and when I'm in a good mental state, that's when that's when I have the most clarity in terms of kind of seeing trade opportunities and not forcing my will on a trade.
And I don't want to speak for you, but I would assume, well, how do you relax? Well, you relax when you actually have a strategy that you have confidence in. Is that what helped you relax or at least played a pretty decent sized role in that?
Yeah, that definitely played one of the larger roles. And then just like Hooch was saying, I have actually 2 other forms of income here in Colorado. And just that kind of really took the pressure off where I was like, okay, guess what? Just take time and develop your trading. And, it's going to either big wins, big losses, or, small wins that can eventually turn into big wins. Once I kind of had, that, solid strategy that I actually believe in, and kind of some additional side income, I'm a firm believer with you that, multiple income streams is kind of the way to real wealth. So once I kind of started the ball rolling for that, that's when trading really started to come together for me.
Nice. Wilson, before you have to leave, what is another one of your mistakes?
Oh.
Or do you want me to take it? Because I got one.
You go ahead.
Okay. Yeah. The one, and this will probably sound cliche, but it really does. I have the perfect real life story to illustrate this, but I totally underestimated the emotion of greed. And my proof of this, and I've told this story many times before, but it really epitomizes just how nasty, how tricky greed can be. But I literally, because of greed, thought that I was going to be able to maybe drop out of college or just finish it up and then never have to work a day in my life because I had found this penny stock, and this penny stock was going to make me rich because I bought it at below a penny, but it was definitely going to $1 and probably more than $1. I mean, $1 was minimum. And this penny stock was going to, I did all my numbers, I did all the calculations, and I was literally going to be just, showering in money. And, and now that's nothing new, but this is where the tricky part comes. Somehow greed got me to believe that all this was going to happen because of a company that specialized in stainless steel mufflers. I mean, it'd be a little bit more acceptable if I was talking about like, oh, there's some biotech company that's going to cure cancer, or I don't know, there's some gold company that's good, that they're going to hit, literally the jackpot of gold. But here I did, and I wish I could say I was making this up, but I thought I was going to not even have to work a day in my life because a stainless steel penny stock company was going to multiple dollars and was going to make me rich. And, that is just an extreme case, I know, but greed, ever since then, I've been a lot more aware of, okay, is this kind of greed showing up right now in my strategy? Is this greed that's maybe influencing in this decision? Is this greed that's making me want to, act in this certain way? And I see it quite a bit, and I'm definitely guilty. But you can't underestimate it because it is a sneaky little thing. And before you know it, you're either forcing a trade or you're just doing something. Whereas if you kind of boil down the emotions and peel back all the layers, it's flat out greed that was the core problem of it. And I mean, Nate, by the way, he had to leave. So Nate, thank you very much for taking some time out of your day and sharing your input. But Ches, Hooch, I mean, any of you guys, I'm assuming in some form or another, greed is probably. Did any of you underestimate greed, or have you just kind of always taken it seriously, but then still had greed show up?
Yeah, greed is one of the worst things to deal with emotionally when you're trading. I mean, doesn't matter how good or bad your day is going, you always think that you can, squeeze a little bit more out of the market, or even if the market conditions aren't normally what you would be trading in, you think, oh, I've had such a great day, I can, I'm having a good day, I can, make another $100 or whatever. It's like, I don't even consider myself a greedy person, but it's just something that, something in trading that just brings it out of you.
Jez, what about you?
I'd like to think that in the rest of the world, I'm not a greedy person, but I think when I had a smaller account, the greed really showed up because my mentality at that time was, I need a big win to kind of make this account, the size I wanted to, versus I really just need to kind of do the guaranteed trade, a JOB, to get my account to where I want. So it's when, being from a position of strength versus being from a position of weakness. And whenever I was in that position of weakness, that's when greed would really kind of roar its ugly head at me.
So talk more about position of weakness. I mean, because that's actually a really interesting point, and that would make sense when greed might show up. But I mean, do you have a specific example of at some point when you were in a position of weakness and then all of a sudden you kind of opened up the window for greed?
Yeah. And I mean, the thing I do with advanced options, it's like, to me, it's the epitome of having literally no greed at all. I put my order on, and then within 1 minute, I have an order to close it at a profit target, and then I don't have to check it. There's a lot of people that I've talked to that are like, oh gosh, you could have made 100%. And I was like, guess what? I'm pretty happy with 50%. If I can get 50% over and over again, that adds up pretty quickly. So I think finding that, to go back to what you're actually asking, the position of strength or weakness, the guy who's got a fund $1,000 Sure Trader account is generally worse off than a guy who's got, say, a $5,000 account and trades options, knowing everything because he's educated. The guy with the $1,000 is like, well, I have 2 times leverage. I'm using an offshore broker. I really kind of just want to hit a home run trade, buy 1 million shares of some penny stock and then just hold and hope, when in reality, the fees have just eaten up his $1,000 and he's probably lost it within a couple ticks against him. So it's just kind of setting yourself up for success is probably how I would define kind of being from a position of strength. If you're just kind of winging it and you put $100 in Thinkorswim and then you think you're going to trade from your phone while driving a big rig down the highway, to me, that's a position of weakness. You're not really setting yourself up for success.
I was thinking the whole time the word desperation, like that, those sounds like desperate type circumstances.
Exactly.
But then to your point, which was, what you're saying is still, what's the cause of that desperation? Well, the cause is greed in the form of, hey, listen, doesn't that sound great to be driving my big rig as I day trade from my phone app that I'm not paying 0 fees on and
living
I'm just
the
going to hit
life.
it big? I mean, if that's not a pie in the sky mentality, and where does pie in the sky mentality come from? Greed. Then, I don't know what is. And there's a reason why late night infomercial marketing works. There's a reason why people stand in front of their fancy cars and their fancy houses and their yachts as I talk about trading or real estate or what is it? This Amazon drop shipping stuff. I mean, anything. There's a reason why in the background, all those things exist because, oh, wow, that looks nice. And, they're just trying to they're trying to tap into the greed that, everybody does have. But yeah, that's a good point about, when you reach desperate situations, there's always another, a safer way to go about it. But maybe, that's not necessarily the preferable way. But again, that's greed that's driving all those emotions anyway. So that's actually, good discussion there. Ches or Hooch, I'll leave it up to you guys. I mean, one of you guys want to take or share another mistake?
We kind of already talked about the other two that I had listed. Like I mentioned earlier about not getting educated first. That's obviously pretty much everyone's biggest mistake. It's very rare that someone does realize off the bat that they need to get educated before they start trading. And, I would say like 99.9% of people go into trading just thinking that you just, buy something and then you're rich, X number of days or years later. So
I would compound onto that. I think a lot of people think that education, and we've talked about this before, but I think a lot of people also classify that as what Hooch said. But then what are you talking about? I'm educated. I watched some random YouTube videos. I read some random blog articles. I went to Investopedia. I'm ready to trade. I'm ready to make the big bucks. I'm educated.
Or you took your business course in high school. So.
Yeah, exactly. I took economics in high school, and I won the stock picking game that we had. But the thing to remember is, and I get it, you're just saying that because it's structured, because you sell education courses. That's fine. Don't spend a dime. Go out and do it your way, and we'll see how things work. But there's a big difference between random information. And actually, now that I think about this, the podcast where this is talked about, it will be in the next couple of weeks. But we have an analogy that somebody used that hasn't aired yet. But he's like, if you have an engine and all the parts are just sitting there, let's just assume that all those engine parts are the proper parts. Now, that's already a pretty big assumption in the first place, that you were either able to somehow gather all the parts of this engine from all the other engine parts that are out there. But okay, we'll assume that crazy situation actually played out. But you still have to now know, well, what order do I put things together? And that's how trading education and just education in general works. There's no denying that there is a bunch of free stuff out there. But even if you could pick out all the accurate pieces of free information, well, now you actually have to watch those pieces of information in the right order, or else you're going to confuse yourself. You're not going to go about things the most efficient manner, and it's not going to work out. Well, Clay, that's all just theory, and that's you saying that because you sell stuff. Can we at least agree on this? Most people say 9 out of 10 people fail. Some people say actually it's like 95% of people fail, but 90 to 95% of people fail. Could we not agree that if trading and being educated was as easy as picking up a book off Amazon or at the library or just watching random YouTube videos, would logic not dictate that success rates would be at least a little higher than 10%? I mean, I think that Hooch, Ches, is that a rational, logical, jump of thought process in my part?
Yeah, for sure.
I mean, it's and I didn't really want to talk about this, but that's true, is because I don't want this to turn into a sales pitch. It's really not a sales pitch. If you don't believe me, that's fine. Don't buy anything.
It's a fact.
Go on your merry way. Yeah, and I mean, what we always talk about, we need somebody to buy the tops and sell the bottoms. For us educated traders that know what we're doing, we need mindless sheep out there. We need headless chickens running around, or else we're not going to be able to get those awesome entry points or exit points that sometime we're able to get. And if you ever have traded and you're thinking, how did I just get that entry point? That was awesome. Well, because there's a bunch of people that probably thought, that whatever they were doing made sense when in all actuality it didn't, and it gave you, the educated person, a great opportunity. So it's kind of
I think one of the best things I've kind of learned from you a long time ago, and I'm going to spoil some webinar content right here. I promise it's not too crazy, but just you saying this to me was kind of an inspiration to help me find trades. Was pretty much think about think about this trade from the other side of it. So if I'm going long, think about people who are short. Where is their moment of pain? Where are they tapping out? As soon as you start to kind of look at the other side of, say, the field, then you really start to see, oh yeah, like they're really going to be hurting if it gets to this point, or oh no, they're totally fine here. Like there could be, consolidation at this point. But just thinking about it from the people on the other side of your trade, that really helped me a bunch in terms of kind of spotting great points where I'm just like, oh, either the tide is changing or, this is where people got scared. And then ideally it's probably one of the best entries.
Yeah. And I mean, really that's spoiling nothing. I mean, because you make a great point, but as far as defining and quantifying, how do you actually get in, as you said, looking at the other side of the field, or, how do you get in the other team's huddle? Well, that's what knowledge, that's what a true structured education is going to teach you how to do. But yeah, that's exactly a way you can go about the market is, well, how does the other people of the other side of the trade, how are they viewing this? And that can really help things out quite a bit. But at the end of the day, you're right. It's a cliche saying, but it is. You got to get educated. And unfortunately, education is a whole lot more than free videos. And that is not lip service on my part. When I got into real estate investing, I spent close to $5,000 on education because I realized after this whole trading experience, you know what? Structured education is definitely the way to go. And another one for me that I figured or did either of you, Ches, did you want to ever bring an up, or are you okay with me doing another one?
No, go for it.
Okay. The other one that I learned and plays a crucial role is just not realizing or understanding the importance of liquidity. Liquidity meaning how easy can you get out of a trade? Getting into a trade is never, ever the problem. There's always somebody sitting on the offer, sitting on the ask that is willing to sell you, whatever you are looking to buy. There's always somebody that's looking to do that. However, when it comes to somebody that may be wanting to buy what you are now looking to sell and already have, that can be a whole nother question. And I learned that very, hard and, even, well, not necessarily recently, but all strategies have different liquidity requirements. Again, liquidity is how easy it is for you to be able to sell something. Or if you're shorting, how easy it is for you to be able to, to buy something back. But again, there's always somebody to you could always buy it back from somebody. So it gets a little bit shakier from a shorting perspective. But the point here that I'm trying to get across is you have to realize that at the core of the market, the core market theme is, okay, I need somebody to buy this from me. Not necessarily even higher than what I bought it from, but at least within reason so that I'm not taking a huge bloodbath, or else, in an absolute worst case scenario, there's nobody that wants to buy it from me, which means it's now worthless, which means I just lost all of my money that put into it. And I am definitely talking very broad here. And there's a lot of finer details that come with liquidity. But that's something where if you underestimate it, if you don't understand the importance of it like I did, you're going to be in strategies aren't going to work. Or maybe they work, and this is always in paper trading, because paper trading, it's hard to kind of factor that in, but you need to realize that the liquidity that a position has is going to dictate a large role in it. And how do you fix it? Well, again, it goes kind of back to just having a strategy, having the right mindset's not the right word, the right mechanics in the sense of what you need to look for and how what you're looking for is going to dictate, whether or not you should be getting into a trade, whether or not you should be, putting on some sort of strategy or not. So, I mean, did any of you kind of underestimate liquidity or just not realize the importance of it when you got started?
The penny stock world is where I kind of really had my first brush up with that. But that was just, that was when I definitely shouldn't have been trading at that time. And the spread was just nasty. And just like you said, it's not even a matter of selling for profit. It's I wanted to get out, and it was drastically lower than the actual price I wanted to get out. It was just a no volume, no name that I thought I saw something, but it was really me just forcing my will on it.
Yeah. And Hooch, I would assume that you are very aware of, and Ches too, because I know you guys both trade options, but especially in the scalping world, Hooch, I would assume that liquidity is probably something that you factor in pretty high up the list of your kind of checklist of what needs to be in place before you would ever put on a trade.
Yeah, for sure. With options, even with the more popular tickers, there's always certain strikes that you're avoiding because you can see that the volume for the day is quite a bit lower than a different strike. So yeah, even with options, especially with options, you should be focused on volume and because the spread can change so fast in options and prices can spike even though the underlying is not really doing all that much. Just if you have something that's more liquid, then you're gonna avoid that type of situation and you're gonna get better fills. So yeah, for sure.
Yeah, and fills is, I don't know. To me, it goes back to the real estate saying, you don't make money when you sell your house in real estate investing. You make money when you buy. And I think it could be argued quite a bit for trading. You're not necessarily making money when you get out of the position. You're making money when you get in, because if you get the right entry point, to Hooch's point, or in trader lingo, like you said, if you get a good fill, quote unquote, that can make life not a guaranteed victory, but that's going to make things a whole lot easier. As your plan or strategy role, plays out. Some strategies, yeah, the fill isn't necessarily as important. My personal strategy, especially the first fill, very, very important to make sure that the strategy stays leveraged in your favor. So you really can't underestimate, the power of the fill. But circling back, the ease at which you can get a good fill, get a good entry, is going to be highly dictated by the liquidity and the volume. But then most important, like I said, in terms of, anybody can enter into a position. However, that doesn't mean that you're necessarily going to be able to sell it, which is essentially what's going on with Bitcoin. I mean, if you think about it, there's people willing to sell to other people at, how high did Bitcoin go? 20,000, right?
Yeah, right around 20,000.
Yeah, I mean, so think about that. There's plenty of people willing to sell you their Bitcoin for $20,000, and people bought. Now those people that bought at 20,000, if they want to get out, okay, well, people are only willing to pay, I don't even know what it's at right now, 3,500, 4,000. They're willing to pay 4,000 for it. So I assure you, those people had no problem at all getting in at 20,000. But now things are a whole lot different. So you got to.
We need people to buy the top and sell the bottom. That's the beauty trading.
Exactly. Jez, you have one more? I mean, looking up at the time, time absolutely flew by. But one more to top us off.
No, honestly, I don't. My whole thing was just mainly you need to be mentally prepared to trade. I think that's probably the biggest thing for me, and just kind of setting yourself up for success. Because I assure you, you can watch all the videos of Clay trading all the time. Just remember, he's been doing it for 10 years. It didn't always come that easy to him. So yeah, it takes some time, it takes practice, and it just takes education and a strategy.
Yeah, no, that's that's the core. You have to be prepared, you have to be focused, you have to be this and that. And at the end of the day, it truly does come back to, well, do you have a strategy? And the easiest way I could boil this down, and this is not a unique analogy, but if I tell you to cross the street, are you going to freak out? No, I would assume 97% of the population is not going to freak out. Why are you not going to freak out on the basis of crossing the street? Well, you're not going to freak out because you have full control of the situation. You're fully prepared. You're fully confident in the situation. Well, how so? Well, because you have a strategy that you know works, that you've been taught, or that you've maybe developed, or that you just know it works. And what is this strategy to cross the street that causes people just not to panic? Well, you look both ways, right? It's one of the first risk management strategies we're all taught as kids, is look both ways. And the same goes for trading is, how do you get prepared? How do you have full confidence? How do you just, ensure that you're going to give yourself the best possible chance to get across the street? Well, you got to have a strategy in the first place. And your strategy is not, well, what broker do I use? I don't know. What's your strategy? Well, I don't know. Well, then how are you going to know what broker to use? So you got to start with the strategy. And the strategy starts with having a full understanding of the market, of trading, and how it all works. And how do you get that full understanding? Sure, you could go out on the internet and pluck all the random bits of free information. And even if you got all those being accurate, well, you still got to organize them and watch them in the proper way. And that's a pretty tall task, and why failure rates are as high as what they are. But at the end of the day, you got to have a strategy. I mean, would you guys agree that's at the core? it's all about strategy, because from a strategy perspective, it's not only going to fight off greed, but it's going to give you confidence. It's going to give you peace of mind and all that. I mean, I'm not too far off in left field, am I?
No, not at all. I mean,
no, it definitely not.
Okay, good. I want to make sure that I at least had the Canadians' approval, because that's really all I'm after here is Canada and getting our friendly northern neighbors' approval. But
well, I was just gonna say
over an hour.
I was just gonna say, like, pretty much everything we've talked about is different ways of taking mental pressure off of yourself. Like as far as the education and coming up with plans and defining your risk and what you're going to trade, how you're going to trade. It all boils down to taking pressure off yourself and putting your mind at ease, knowing that you might actually know what you're doing and are able to actually execute and be consistent. And once you've got that feeling that not that you're conceited or you think that you're invincible or anything like that, but just the fact that that you've got a plan and a system that works, and and other things like a job or other source of income or whatever it needs to be to help ease your mind even more.
No, that's I fully agree, and that hits the nail on the head. That's essentially the core theme of what all these mistakes have revolved around, and the fix to them all just revolves around, like you said, just peace of mind.
Yeah,
you got to have peace of mind, because this is a very big mental game, and not a very big, it's a massive mental game. And while there's no guarantees, the one guarantee I will make is that you're giving yourself the best chance of opportunity of mastering, the mental game and obtaining peace of mind by just getting yourself a strategy that fits into your personal risk tolerance. And yeah, that's a broad statement, but it's different for everybody. And there's tools that you can learn to build a strategy. But yeah, that takes work. And unfortunately, the work is not signing up for a service that promises to send you text message alerts so that you can score a profit when you're on the seventh hole of the golf course. It takes a little bit more than that. So we'll wrap it up unless anybody else. Ches, Hooch, you have any? Well, Hooch, I guess you kind of just gave your final thought, but Ches, you got anything else, or we good for episode 200?
We are good for episode 200. So make sure we skip. Let's release this 1 week late so we can say we missed one Monday for the podcast.
That would be a pretty good troll job. Like, it was so close, but we should do that. That would actually be kind of funny.
I do actually have one more. I do actually have one more thing that I just thought of. After that last talking point, there was knowing another big mistake is perhaps knowing when not to trade. Like, for example, if you're getting married or if you're moving or you've got some other, major thing on your mind.
Oh, yeah, that's a great point.
Trading is such a mind game. You need to have 100% focus on what you're doing. And if you can't have that, then you're better off just not trading, because guaranteed you're going to lose money.
So this may get confusing with the double negatives, but what you're saying is a mistake would be to not know when to not know when to trade.
Right.
Okay. So know when to not trade would be not the mistake. That would be what we're striving after, because that's a fantastic point. Although kind of confusing based off what the theme was here, but no, that is because I definitely serve this. Ches, I won't say my favorite, but definitely got to be top 5. I guess share with listeners real quick about, I think it fits into this, but when you were trading before your wedding and you're in the futures and the thing was just totally, wasn't that a situation when you probably shouldn't have been trading?
Oh, absolutely. There's
tell the story then. Episode 200, What better time to tell this classic story? That's crazy, but it's a good one.
So, it's amazing how the mind works. But yeah, I started with a $5,000 futures account. I have a wedding that's happening in less than 2 months. And guess what? I was doing great. I took that account to like over $9,000. I've almost doubled my account. I was like, yes, all this extra profit is going towards my wedding. Like, the more money I make now trading, the less money I have to kind of pull. I had money set aside for the wedding, but this was offsetting that. It was going to essentially, quote unquote, cost me less. Sure enough, keep getting a little greedy. I'm like, okay. Futures have a mean amount of leverage. So I was only trading 2 to 4 contracts at a time then. And it goes against me. I'm like, okay, I'll double up at the next support. Okay, now I'm at 8 contracts. Okay, I'm like, oh, wow. This has to work. This has to work. This is a big position for me. Sure enough, it keeps going lower. When you come out of consolidation, things just keep running in a direction. Buy the next support. Now I have 16 futures contracts, which, hang on, let me do the math on that. So every time the price went against me, every time it moved a tick, it moved $200 of my P&L. I'm talking about, like, think of if you're trading a stock, every penny it moved, my P&L moved $200. So at one point, I am like in the red by well over $5,000, and I was like, oh my gosh, like this was kind of one of those moments where I was like, I might have just blown up my account here, and I'm just paralyzed, deer in headlights, not willing to sell. Lucky for me, it eventually turned around, and the sad thing is that I made money. However, this was such a big learning lesson to me that I actually stopped trading until my wedding came up, because I was like, I pretty much gambled at that point. I was willing to gamble $9,000 just because I wanted to offset some of my wedding costs. So I would have went from being, handsomely profitable and, really offsetting a portion of my wedding to now I'm really in the hole, and I just pretty much lost all the money that I had kind of set for that. So yeah, greed is an absolutely awful thing. Then there's another moment in time where I was trading Bitcoin, and I was moving, or we were about to buy our house, first time house buyer. And I just took a stupid trade, and I was like, oh yeah, the more money I make, the more I can put for this down payment. And same thing, except that one didn't work, and I lost a good couple grand. But yeah, big moments in life can definitely kind of impact your trading and impact your mentality. And Hooch, I mean, you would say that kind of having Josh in your life, didn't that change your stuff
for
right
sure,
away?
Because now we've got right,
Josh being your son.
Yeah, I didn't name my dog Josh or my goldfish Josh. Yeah. Yeah, for sure. Like, not only the extra expense of having a child, but just knowing that his future relies on you, and what money you're pulling in, and his quality of life is going to be based on how much money isn't everything, but you do need it. So yeah, that puts definitely a lot of extra pressure in a lot of different ways.
And I mean, to kind of wrap or full circle here, in Chez's story, correct me if I'm wrong, Chez, but the root cause of all of this was you not knowing that, I probably shouldn't even be trading right now with the wedding so close. So you not knowing that almost cost you a whole lot of money.
Absolutely.
Whereas bringing back to Hooch's point, right? I mean, when and that's what Hooch is saying is sometimes it sounds counterproductive, but if you shouldn't be trading, it may come across as, well, I'm losing opportunities at money. I have my opportunity cost. I'm losing out on this opportunity. It's costing me. Yeah, but a penny saved is a penny earned. And if certain situations are causing new mental voices to show up, then the other part of, I don't know what the opposite of opportunity cost is, but you could just be simply saving yourself from, bad losses that may occur because you have these voices that show up. It seems kind of confusing. And if you've never traded, kind of counterintuitive, but Hooch makes a brilliant point that, yeah, a mistake would be not knowing when to not know how to trade. So make sure you understand when you should and shouldn't be trading, because forcing trades or trading in environments such as an approaching wedding in Chez's story, as he shared, it worked out for him, but it could have been
it could have been awful, right?
Yeah, it could have been a pretty nasty situation going into a wet. Oh yeah, I'm glad that thing bounced back for you, because that could have been yeah,
looking glum on your wedding day. That's every bride's dream, isn't it? Yeah. So there's absolutely no shame in pressing the pause button, and that's what it ultimately is. You're not quitting trading. You're just pausing until there's a lot on your mind. Having a baby, having a wedding, buying a house, any kind of big stuff like that. Your brain is focused on that. It's a big deal. It could be a milestone for you. It could be whatever. It's just a big deal. But yeah, that kind of stuff will definitely impact your mindset when you're trading. But yeah, there's absolutely no shame in pressing the pause button, getting through these things with a clear head and with 100% focus, and then coming back to it the minute you're back to your routine.
Yeah, and which brings us again, literally full circle back to what Hooch brought about peace of mind. It's hard to have peace of mind when you have all these other external events out there. And if the goal is peace of mind, then that sometimes means, well, then just don't trade and it'll be okay. We had that false. So I don't know. Are we good now? Because I thought we were done 10 minutes ago, but then we went down this brilliant rabbit hole. So does anybody else? Ches, do you have any final thoughts? Hooch, do you have any final thoughts? Because that was a really good rabbit hole. I think
that's it. We've covered my 3 points. So my third point was not using a broker that's best suited for your type of trading, but I think we kind of covered that earlier with the commissions and everything else.
I kind of stole your. Right, but that is definitely a very valid point, is to try to fit a round peg through a square hole when it comes to broker. So, okay, Ches, do you have any final rabbit holes that you would like to take us down?
Yes, I'm going to talk for the next 49 minutes straight about fundamental analysis. No, I'm good. I think we covered everything we needed to.
Cash flow statements and balance sheets.
Let's crack out a balance sheet and look at it together. Yeah.
Hooch, did you do that stuff when you used to be a banker or work for the bank?
When I worked at the bank, I was just a lowly programmer. I didn't even know anything about the actual banking business.
Right.
I got into trading because the other guys I worked with did it, and there was just
That's right. Yeah. You were more of an IT guy.
But yeah, it was all like when I first started trading, I didn't even look at charts. I just looked at how much money a company was really worth, and it was like at 1,000 times more than what it was trading at. So obviously it's going to go up, right? So.
Yeah, it's got to go up. It's got to go. But that's kind of a spoiler alert. Go back to episode 2, and that was Hooch was literally our first guest. Our first episode was I interviewed Ches to introduce him to the show, and then guest number 2 was Hooch. So yeah, I guess we have some numerical pattern. He was on episode 2 and 200 and several. I think you were on the 2-year anniversary episode. You were on a welcome back episode. I don't know. So Hooch is you've been on at least 4 or 5 episodes. But I think I've stalled and rambled long enough. It doesn't sound like any of you are having any last second thoughts that you would like to talk about. So we will wrap this up. And again, Nate, who had to leave, thank you very much for taking time out of your workday for as much time as you could afford. And then Hooch, our friendly Canadian from up north, thank you for taking time out of your day. And thanks for leading the way, being a good inspiration and doing Uber Eats, doing whatever needs to be done to build up the account and not putting it all on black, because that might be the easier way to do it, but you understand risk. So that's probably not the wisest way to go about it. But Hooch, thank you very much, man, for hanging out. Awesome. And I look forward to many more years to come, as this is now also coming out right around the 5-year anniversary. But Hooch, you were another false. I promise we'll wrap things up. But he was one of the first 300 that ever signed up for the site. Do you remember when you bought, as far as month and date? Was it in 2014, or did you get? Because I started it officially in December of 2013. So
yeah,
right
I think
near
it might
the
have
end
been
of the
January
year,
2014. So yeah, but it was okay. Soon after. Yeah.
Either way, yeah, you have been around from the start, even around longer than what Ches has been around, and Ches has been around.
I remember I joined your
too.
message board on iHub, and then you had started talking about getting rid of the trolls and starting up your own chat room and stuff like that. So I was there from the beginning. I just might not have put my $99 down right away. So yeah.
There you go. And bless your heart for the $99, because I remember version 1.0 of the website. We've come a while, which is why certain people get away with more, because I have in the back of my mind the context of, hey, if they trusted me when the website looked like it did, bless their hearts, go away. Break a few rules here and there. Troll me as much as you want, because I appreciate the gratitude. And Hooch is definitely in that category. But it's been a wild ride, and Hooch has literally been around the entire time, which also goes to show when you get a strategy that works, when you get a right mindset that works. I mean, Hooch is not sitting here saying that he's living on a private island. Maybe he does, and he's just too humble. But the point is, you can stay in the game. You can survive. And you can make it work. And we have many members that have, Nate Wilson, he was on episode 7 and he's still around. He's still trading. Ches, still around, still trading. So, I mean, the point here is that avoid these mistakes we've been talking about. Get a strategy for yourself. Get a real strategy. And yeah, it is possible to stay alive in this game, which does chew up a lot of people, most people, but have a strategy and things can work itself out. So thank you to both of you. It's been a wild ride, Ches, Hooch. Been a wild ride just from you've seen everything from the ground up, but I think that's it. So nobody has any final points. I stalled for a little bit more. Okay.
Nope. Here's to 200 more.
Yeah, I guess. Well, if you think of another point, we'll have to just wait till episode 300. But finally, before we go, to all you listeners out there, hard to imagine this is the 200th time I've done this, and I still screw it up. You'd think I'd have this memorized. But if you're listening to this on YouTube, make sure to check out the channel as a whole. There's lots of other videos. There's live trade videos. There's a vlog. There's quick tip videos, all sorts of different things. There's a video where I follow Ches around for a day and he walks me through, how we swing trades with options. And there's just a good variety. So check out the YouTube channel as a whole, and hopefully you decide to ultimately subscribe. If you are listening to this on iTunes or any of the other podcast players, then subscribe so you're notified when new episodes come out. And probably most importantly of all this, if you could leave us a rating and leave us a comment, especially on iTunes, that goes a long way and really helps us out. And finally, if you're listening at claytrader.com on the show notes page, hit that share button, and down below there's an area to leave comments. Please leave a comment, thought, suggestion, feedback, whatever you want. We will read those. We will reply to them. And, we kind of take pride in the fact that we're willing to respond if you reach out to us. So again, thank you to Hooch. Thank you to Nate Wilson and our esteemed co-host Ches. And most importantly to you as listeners, especially if you've been around for all 200 episodes. Hey, that's awesome. And here's to another 200 more. Thanks. And we'll see you back next week.
This has been the Stock Trading Reality Podcast. Thanks for taking the time to hang out. To learn more about Clay and the Clay Trader community, including the trading team, premium training, and more, visit claytrader.com.